It's 9 minutes after 7 to talk about the markets. We're joined by Michael Traherne, a portfolio manager at Investec Asset Management, and we also have Jameel Ahmad, the global head of currency strategy at FXTM, joining us on the line. Jameel, I'm going to start off with you. I mean, we started off, I suppose, with probably one of the wildest trading sessions that Wall Street experienced on Monday. It's Wednesday. I mean, when you look back, what do you make of the performance you've seen in the markets, on whether it's Wall Street or other markets as well?
Good morning, and thank you for having FXTM once again. So I would say that it was a roller coaster ride, and it was a continuation of the same momentum we've seen in global stock markets, whether mostly in Wall Street, but in Europe and Asia and emerging markets as well. And it seems the continuation of a very subdued and inconsistent sentiment. The markets can be up, they can be down, but in this particular day, Monday, will be remembered because it was just a roller coaster. And it's not the first time this has happened. It was probably the biggest, wildest day since February, but even at times last week, the markets in the United States were flipping, and it probably goes some ways towards articulating the number of different external uncertainties and how this is driving investor sentiment, and just that the stock markets at the moment are very volatile, and it's quite unclear to say what's going to happen next in stock markets. They could quite rightfully continue to edge lower, and I believe they will. However, other times investors have taken the opportunities to buy on the dip, and US stock markets have hit new record highs. So it's a matter of waiting to see what happens next, and we're now just 1 week away from the US midterm election, which could be another volatile event for the US stock markets.
You say it's not the first time, and we've seen this in February. Are the factors still the same, or are there more factors that have added to this volatility that we see?
That's a good question. I would say there's actually some more factors that have added to it, but if we go back towards what happened 6-7 months ago, it did come down to external uncertainties, whereas we still have a number of different external uncertainties as we edge into November. But the most key ones are the potential geopolitical risk tensions around Saudi Arabia, although this is not as much of a risk to the financial markets as it was a week or so ago. But obviously these trade tensions are prolonged, they're ongoing, and it's something that is continuing to keep investors on their toes. And you have this, ongoing political risk element that can come out of the Trump administration. That's something that was still there in February, but in November, again, it's not something that goes away. And there could be a new headline at any given moment just by the looks of a Twitter feed.
Jameel, before I let you go, what will you be keeping an eye on for the rest of the day?
Actually, the dollar overnight and in the late hours of yesterday's trading session, it hit a new 2018 high. So I'd be looking to see if there's any reaction in emerging market currencies. Now, obviously, the dollar continues to hit new highs and meet levels that it hasn't seen now for quite some time. So I'm just wondering what pressure this could bring on the likes of the South African rand, other emerging market currencies, and of course, the developed currencies as well. The British pound and the euro have all fallen to near milestone lows over the couple of days. So I'm just waiting to see what kind of reaction the ongoing dollar drive provides to other global currencies.
All right, Jameel, thanks so much for your time. That's Jameel Ahmad, is the global head of currency strategy at FXTM.